Your next comment to me is going to be, well, if you're right, then why are there $10, $12 trillion in mutual funds? And why does everybody I know seem to use a broker or an advisor? Think of Wall Street very much like a casino. And think of all the people on CNBC, the newsletter writers, the brokers. Think of them as croupiers in a large casino. In fact, think of Wall Street as the house. Now you know if you walk into a casino as a guest, that you're not going to beat the house. And you're going to try and you're going to have some fun and the house is going to take good care of you. But you're not going to beat the house because the odds are the house is always going to win because the odds are stacked against you. They don't build those beautiful casinos in Atlantic City and Las Vegas because people are winning. Look at it this way. From 1925 to 2003, the U.S. stock markets appreciated 10.4% a year. That even includes the Great Depression, 10.4% a year. If you look at the fees you're paying to your mutual funds and your financial advisors, it's probably about 2%. If you add in underperformance of another percent and the taxes you're going to pay because these money managers are selling stocks, you could be underperforming by another 1 or 2%. So let's say on the best case you're going to be paying 3% to beat the markets. If the markets have been yielding 10.4%, that means you're paying 30% of your investment profits to Wall Street to try to beat the market. If you ever looked on Times Square in Wall Street, they don't build these enormous buildings that say Lehman Brothers and Smith Barney and Schwab because they're making everyone so much money. Wall Street doesn't want you to know the secret. They want you to believe that managing your money is hard and that it's complicated and that it's scary. Because if you knew the system and you used the system, you'd be like an individual walking into a casino with a card counting system. The system stacks the odds in your favor. The system, used by all the wealthiest institutions in the country, keeps the odds so that you have house odds when you're playing in the investment game. And that's why you probably don't know about the system, because Wall Street doesn't want you to know. When you pay Wall Street advisors and brokers and mutual funds fees of usually a couple percent every year, your money begins to deteriorate, and over a 10 to 15 year period, you will have usually about a third less money. And that's if these brokers and advisors can at least match the market, which statistically is almost impossible to do. So trying to beat the market defeats the law of compounding and reduces your wealth dramatically. Let's look at a simple example. If I'm using the system and getting a 9% return, and you're trying to beat the market and getting a 6% return, over a 24-year period, I'll make 8 times my money, and you'll only make 4 times your money. This may startle you because you think, well, everybody uses these guys. How can that be true? But don't take it from me. I'm simply exposing it to you on the Market Writers site. Go read what Warren Buffett wrote in his last 2 annual reports about how Wall Street can rob you of over 20% of your wealth over a period of time. Read what Jane Bryant Quinn wrote about the same thing. Read about all the things we've put on the site to expose to you why trying to beat the market and using Wall Street is a loser's game.